Greetings to fellow clients, it's Tuesday, August of 29th, and this is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis through this video, and first of all, let's review the major market movements. So the first instruments we're referring to the dollar index in 4-hourly charts. So the US dollar index, which measures the greenback strength against a trade weight basket of 6 major currencies, it was slumped to a more than 16-month low against a basket of major currencies on Monday, and it was fell by 0.37% to 92.14 as the sentiments on the greenback remained negative following a speech by Federal Reserve Chair Janet Yellen on Friday, while concerns over Tropical Storm Harvey's economic implications added to downside momentum. So in what was quite a day for top-tier economic data, investors continued to focus on Yellen's speech, in which she avoided talking about monetary policies and denting the rate hike expectations. So according to the Federal Reserve Rate Monitor tool now, about 36% of traders expect the Federal Reserve to hike the rate in December. So in the US, fears that Storm Harvey could have overreaching economic implications as flooding caused the storm towed through Texas and the second largest US city in GDP terms, disrupting the refinery activity. So the Texas Gulf Coast is home to nearly a third of US refining capacities, according to Energy Information Administration. Meanwhile, the euro was surged to a 2.5-year high against the greenback, with the pair EUR-USD rose 0.44% to trade at around 1.1978, as investors mull over the possibility of the ECB tapering its quantitative easing program at this September's policy meeting next week in the wake of ECB President Mario Draghi comments on Friday. So Draghi didn't attempt to use his speech at Jackson Hole to curb the rise in the euro, and suggesting that the ECB president may be less concerned than his ECB colleagues with the recent spike in the euro. So the Commerzbank currency strategist, as those Richard in Frankfurt said, Draghi does not seem to be overly concerned with the current euro levels, which is the market's justifications to move the euro higher. While the Great British Pound rose 0.44% to trade at around 1.2936 against the US dollars, adding to gains from Friday sessions amid the thin volumes as the public holiday in London, the global foreign exchange capital kept the market close. Having a tad in commodities markets, the gold price was surged above $1,300 a troy ounce, rose $17.59 or about 1.36% to $1,315.50 a troy ounce as gold bucks continued to cheer a speech by Federal Reserve Chair Janet Yellen, which failed to include details on monetary policy or balance sheet normalizations. And this was narrowing investors' expectations of a rate hike later this year. So the gold price raised to a nearly 10-month high on Monday. It was buoyed by a 16-month slump in the dollar as investors' expectations of an additional rate hike continue to fade. But this was following the Federal Reserve Chair Janet Yellen's decisions to sidestep monetary policy in a speech at Jackson Hole on Friday. So gold price is sensitive to move lowers in both bond yields and the US dollars. A lower dollar makes gold cheaper for holders of foreign currencies, while a dip in US rates so reduce the opportunity cost of holding non-yielding assets such as buildings. So gold price surge above $1,300 comes ahead recent political controversies engulfing President Donald Trump sparked concerns over his ability to deliver on tax reforms, raising investor demands for safe haven assets like gold. And investors' uncertainty over tax reform, however, is expected to clear over the coming weeks after Trump's chief economic advisor, Gary Cohn, reassured market participants on Friday that the president will make major push on tax reform in a series of speeches, and the first one of which gets underway in Missouri on Wednesday. As for the oil price, the crude price that was settled lower on Monday fell 2.7% to settle at around $46.57 a barrel as Tropical Storm Harvey continued to disrupt refinery activity along the US Gulf Coast. So this was adding the fears of an uptick in crude oil supplies. So the crude oil made a negative start to the week as flooding caused by the storm forced refiners in the Gulf of Mexico region to shut down, and sparking concerns over an excess in crude oil supplies, the primary input at refiners. So it is estimated that approximately 331,370 barrels of oil per day, or around 18.94% of the current oil productions of 1.75 million barrels per day in the Gulf of Mexico has been shut in. So this was according to an update from the Bureau of Safety and Environmental Enforcement on Monday. So while the storm is also expected to disrupt the crude oil productions, and analysts believe the impact of lower crude demand at refineries would outweigh the dip in crude oil productions. So according to the energy market analyst at CHS Hedging, Tony Hedrick said, the reduced input to those Gulf refineries will result in an increase in crude inventories, and that outweighs the outage in crude oil productions from the storm. And the US National Hurricane Center said floods caused by the Tropical Storm Harvey were expected to spread from Texas eastward to Louisiana, and home to roughly 3.3 million barrels per day. So the sharp fall in oil price comes amid a bearish period of crude futures, which slumped to a fourth straight weekly loss last week, and as investors continue to question OPEC's commitment to the global pact to curb productions. So an OPEC meeting and compliance last week failed to yield any tangible measures to address the group's warnings compliance with the deals to curb output. So now we're going to review the highlighted economic data and events on yesterday, as well as the focus data and event for today. So yesterday, due to a quiet trading Monday, so we got no any important economic data and events. So as for today, we can focus on the data which will be released by the United States on tonight 10 o'clock, which is the CB Consumer Confidence for August, and it is expected to be slightly weaker compared to the previous 1 to 1.1. The economy's focus is at 120.3. It's technical analysis sessions, so the first instruments we're referring to the Great British Pound against the US dollar in 4-hourly charts. So the pair GBP USD remained traded in downtrend structures, but it was lost momentum due to the price was closed above the resistance level of 1.28900. So the 20 moving average line was shifted its directions to upward and almost formed a golden cross with 60 moving average line in 4-hourly charts. So this was taken as signals for it to move further higher after the price closing above 1.29700, and the next resistance level we can refer to 1.30200. So the MACD indicator provided upside signal as well, with the both movement lines were expanding upward and the momentum seen at the level above zero. While the euro, the single currency, was continue its uptrends, and it seems like gaining momentum due to the price was closed above the resistance level of 1.90100. Currently, it was trading near to the next resistance level at 1.20000. So a closure above 1.20000 suggesting for it to move further higher towards the next resistance level at 1.22000. So the support level we can refer to 1.19200. Meanwhile, the Kiwi remained traded in downtrend structures against the US dollars. It seems like losing momentum since its rebound from the recent low at 0.71900, and currently it was trading within the both moving average lines. So this was taken as a signal for it to be traded ranging in short term between 0.72000 and 0.72700. So a price closure that out of the range, suggesting to move further towards the directions of the side it break out. And breaking through to the level above the resistance level of 0.72800. For short terms, is for short-term retracement periods, and below the support level of 0.71900, suggesting to drop further along the downtrend, and the next support level we can refer to 0.71500. OZ remained traded in an uptrend structures, but it was lost momentum and the price was traded ranging lately between 0.78800 and 0.79400. So referring to both moving average line which pointing upwards, additional with the upside signals showing an MACD indicator, AUD/USD expected to be traded slightly higher in short terms. So price closure that's above 0.79800 is the signals for it to move further higher towards the next resistance levels at 0.80000, and support level we can refer to 0.78800. For the safe haven Japanese yen, it was remain traded in downtrend structures, but seems like losing momentum since it failed to fall below the support level of 108.500, and it is currently remain traded between 108.600 and 109.900. So a closure that's out of the range is the signals for it to move further towards the directions of the side its breakout. And the next resistance level we can refer to 110.800 and support level refer to 108.200. Commodities, the gold price remained traded in a strong uptrend, and it was gaining momentum due to the price was close above the strong psychological resistance level at $1,300. So those indicators provided upside signals with the both moving average line expanding upward, additional with the both moving lines in MACD indicators which pointing upwards. So thus, it is expected to surge higher after the price closing above the resistance level of $1,325, and the next resistance level referred to $1,346 a troy ounce. As for the crude price, the West Texas Intermediate price remained traded in an uptrend structures, but it was lost momentum since it fell through the Fibonacci retracement level of 23.6 at $48.40 a barrel. So the price was fell below the lowest levels of recent ranging range, and it was a signal for it to move further lower in short term. So price closure that's below the current support level of $46.20 will be taken as signals for it to move further lower towards the next support level at $45.30, and the current resistance level we can refer to $47.20. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.